Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a quick look at Bitcoin, kind of help understand where we're heading in the next few days here. Now, if you're new to the channel, not a financial advisor, just love teaching people how to trade. And my goal and my passion is to help you be more successful and independent, right? I have a trading community with that specific purpose to kind of get you the foundational skills that you need. And I'm also rolling out the Trading Academy month in, so be sure to check that out in your own time. Now, regarding Bitcoin here, we got a few scenarios, of course, to look at. I'll mostly just recap my recent videos because I've been fairly bearish on Bitcoin in the short term here recently, and I think it's kind of exuding that same behavior. Yes, we had a little bit of a hike up, but it's coming right back down. Higher, basically lower highs and lower lows for the most part on the smaller time frames, including even the one-day chart. So let's go ahead and take a look at that now. First of all, we're below both moving averages. I think we already know that. That was that death cross that occurred recently, just causing the price action to continue to progress downwards. Till we get back up over the 50-day SMA, we're going to be probably in this kind of shape. Not to say it's going to continue to go down because of that, but we're not going to have any kind of confirmation, so to speak, until that happens. Now, to me, confirmation is the price above 46,000. That's kind of where I think it's going to need to go, because we can see there's a tremendous amount of volume as well as just testing this support level before it eventually broke. So if we look at this, 1, 2, 3, 4, 5, 6, 7, 8 days out of roughly what? That is maybe about 3 to 4 weeks worth of trading. So let's just say 1 month. We had 8 days out of 1 month. So essentially just in the range of approximately 30% of the entire trading time frame where the price tested that support level. It got rejected multiple times. In fact, it got rejected right up here off about 51,000/52. So there's a nice resistance channel at 51.52. And previously, of course, right here at support, right around 46,000, the price was holding decently well for some time. It eventually broke below, and now that's considered resistance. So that's where 46,000 will give me that confirmation to know that we're back up above a major key level resistance. Because between now and whenever that is, we can consider Bitcoin to still be more so bearish on the short term, or bearish divergence, if you will. And let's go ahead and take a look at that too. Because we look at the RSI, when the RSI is under 50, that's a sure sign that we have a key level resistance level we can't pass, or we haven't been able to pass yet. In fact, if we look here previously, you can see right during this time frame when Bitcoin was trending right around 51/52,000, the price could barely even breach basically 50 in the RSI. Yes, it broke above, but it didn't stay above. Okay, kept wavering and effectively got rejected. So that little time frame there essentially tells us that we had a resistance at 50. The similar thing's going to happen as well when the price comes back up to just say 46,000. We'll see that resistance at 50 because again, it's a key level resistance, and it'll hold the price action down until it breaks above and closes above on the one-day candle. Now, keep in mind, Bitcoin could not close above 51,000 previously, and therefore it couldn't close above 50 in the RSI. There's a correlation there, okay? So just trying to draw that little connection there so you understand kind of how the relative strength index is a very helpful tool. In a lot of ways, keep in mind smaller time frames, we have different results, but the one-day chart, it's probably the most effective because again, you have major key level support resistance zones as well as the same scenario on the RSI. So to me, the one-day RSI is really helpful in understanding bearish versus bullish sentiment, and we can still see that we're definitely on the bearish side of things right now, okay? MACD, we did have a convergence here recently on the, 13th. So if you look at that here, you can see on the 13th, the price is kind of coming up, and essentially it got rejected out and the price came back down. That's really where the death cross initially had occurred, okay? So all in all, MACD doesn't really matter all that much, pretty much just telling us that we're kind of wavering between bullish and bearish sentiment, but we're kind of in this zone right now, as you can tell, where the price action tries to keep coming down to 40,500, and it keeps trying to pass 44,400. And it can't do either at this point, right? So it's basically just channel trading. I cover this in my Trading Academy as well, regarding day trading and how to effectively day trade. It's one of the patterns you try to look for. There's either descending patterns, there is essentially ascending patterns, of course, which are the most optimal, and of course there's channel trading here, or range trading, where the price is just ranging between different support and resistance levels, and that's how you can maximize your gains too. So day trading this type of scenario isn't a terrible consideration. Just bear in mind it's fairly volatile at the moment, where it'll shoot up, a good 1,000 or shoot down about 1,000 within about an hour or two. So not the most optimal because it's really hard to get a read on what's going on. But keep in mind too, when the market opens, we commonly see the price increase. When the days close as well, when the market closes, essentially the US stock market, and we see the price decrease as well, because the whales are taking their profits, or day traders, etc. And they're essentially playing that game. I've played it before too. It's totally perfectly fine. There's nothing wrong with that, but it does influence Bitcoin to an extent. All right, moving on to the 4-hour chart. Let's go ahead and look at this here as well. We've got both moving averages are working as resistance. The key takeaway here is that the 50-day SMA is now a strong resistance level. And you can see that it was tested once, almost twice here recently to give us this constant lower high and lower low pattern, right? So you can obviously see that these are lower than the previous, and so is this as well. Now, I prefer to use the candle body, not the candle wick, when you're considering higher highs and higher lows, or in this case, lower lows and lower highs. But generally speaking, you can still see that synonymous behavior where the price is, consistently, in a channel right now, right? We've got this channel where the price just keeps going down, and that's going to continue until it can break that trend. And we haven't seen any, again, confidence in Bitcoin to be able to, feel like that. It doesn't have to hit 46,000 to necessarily break that trend, but obviously 46,000 would give us the confirmation we're up over that key level resistance. Between now and then, we'll take something as simple as being back up over the 50-day SMA. That could be a good sign. And also 44,400 would be equally as good if we can get some kind of price action to kind of stay consistent in that channel and then keep making higher highs and higher lows. Okay. But at this point, obviously, we can see the same thing following suit here. We're under 50 on the RSI on the 4-hour even still. So the midterm basically tells us we have no reason for the price action to be turning around anytime soon. Again, we have to be breaking that key level resistance, which the RSI is fairly reflectant of the 50-day SMA, which is right around 42,700 at this point. So I'd venture to guess 42.7 is a pretty strong resistance at the same, which is also the same as 50 on the RSI, okay? Now, if you hear me keep saying that, what I'm trying to get across is the fact that, keep in mind, 50 on the RSI changes resistance and support levels as it evolves, right? As it averages out. It's based on 14 candlesticks, or 14 days in the 1-day chart. So when you kind of think about that, it's important to understand that RSI is always evolving. It's always adapting to the price action, which is why it runs synonymous with the 50-day SMA as well, because it does also work with a moving average, which is, again, something to understand. So you don't necessarily have to understand this. I go in deeper dives into this as well in my trading academy, but for the most part, RSI is a really helpful tool on both the 1-day and the 4-hour chart to help you understand more specifically kind of what the overall sentiment is. It's still relevant on smaller time frames, don't get me wrong. It's just moving faster, and you need to understand what time frame is relevant for certain things. And to me, the 50-day SMA and the 200, of course, which are these two lines up here, they are relevant on the 1-day and the 4-hour chart more so than the smaller time frames. Okay, exponential moving averages work better on smaller time frames, right? Again, I teach all that in my academy, of course, which will be available month end. But I just want to drive this home here that we see that right around 42,700 is where the SMA is kind of averaging itself out. That is effectively 50 on the RSI for the moment. So until we can break above the 50-day SMA, we're not going to have any type of confirmation, okay? At least short term, or more so midterm in this case, right? Because again, what happens in the short term translates into the midterm. What happens in the midterm translates to the long term, more so macro. Macro is telling us where we see bearish sentiment. The midterm is telling us bearish as well. And I'm venturing to guess the 1 hour is going to be the same scenario. So let's go ahead and take a look at that. So the 1 hour chart, we can also see lower highs and lower lows a little bit more definitively, right? We don't have these large candle wicks, but those candle wicks are caused from these large increases and decreases. That being said, we're not in terrible shape in that sense. I don't think the bottom's just going to drop out of Bitcoin anytime soon, but we should see the slow bleed continuation to the downside. Okay, so just again, something to consider. If we take a look, obviously, at TD sequential, we can kind of see here that we're at this we hit this reset up at a 4, but previously a 9. And then with us being at a 7, we could likely see the price come down and bounce somewhere off 41,200. So that's the likelihood here in this scenario. Is it going to bounce and continue to shoot upwards? Not necessarily. It'll probably come up. It'll reject somewhere around the range of 42,300 and continue down. Because again, it hasn't shown any proof that it wants to break this pattern that's forming here, this little channel that we see so far for Bitcoin. It's basically a descending type of pattern, and until it breaks that and can kind of come free, we're not going to see it go anywhere. So for lack of better terms, if we look at the big picture here, there's a strong chance that the price will break down to either 40,500 and or 37,500. Now 37.5 is a key level support based on the previous time frames, right? We can identify the fact that it's worked very well to hold the price action in place for a few different scenarios. Now keep in mind, if we do, the reason why 37,500 is the next key level of support outside of 40,500 is based on its volume profile. So if you look at the volume profile and kind of zoom out a little bit, you can see we have a lot more volume accumulation in this range here, but there's not a tremendous amount right here in the range of 37.5 to 40,000. Okay, so again, we lose this support at 40,500, which if it gets tested 1, 2, 3 more times in the near future, then we're going to have an issue where the price is going to break down below, and it'll kind of, I wouldn't say it will free fall, but we will very likely see a candle wick down to 37.5 at the very least. That should be a very strong likelihood. And this is the main reason why I'm recommending my community kind of hang tight for the moment. I wouldn't say everything's completely on hold, but I have a lot of swing trades I want to send out, but I'm not until we have confirmation. Now, to me, of course, bullish confirmation, I would love to see 46,000 or higher. But truth be told, my confirmation in the short term, in other words, when I expect to see a turnaround, would be for the price to kind of average itself out at the low 40,000 range and possibly wick down a little bit lower. And then once we get that last candle wick down, I think that'll probably be the very last bear trap, so to speak. And effectively, we should be able to see a price action increase from there. Okay, so again, we're building a decent foundation of volume here at this range. So all in all, we're not in terrible shape. But I just be warned that if the price were to come down to 40,500 and continue to test that like it has previously 3 times already in the last 2 weeks, we should expect the price to digress even further. Okay, because again, this pattern here effectively is telling us the price will likely break to the downside, not the upside. There's no reason to break to the upside until we can break these lower highs, lower low patterns. We need to get it back up over 50 on the RSI as well as 50 on the SMA, at least on the midterm of the 4-hour. It would be nice to get above that on the 1 day, but it's going to be a little while before you see this 1 day, 50-day SMA work its way down. I mean, you think about it this way, if it just keeps averaging itself down, that'll put us somewhere in the range of first week of February. So this is another reason why I personally feel that February will be a much better month for Bitcoin and the altcoins, based on the fact that we'll be back above those moving averages. Because if you look at history, so to speak, you can tell that when the price is above the 50-day SMA, Bitcoin usually does very well, right? You can kind of obviously see that. But when it comes below and it stays below for a very long time. As we can see here, this range here, ever since November 18th, the price has been down there. So literally, we've been down under the 50-day SMA for 2 months. We looked previously as well. How long did that occur? So the price went down below the 50-day SMA on April 19th, and it took upwards of June, July 24th. So it took literally 2 months and 1 week for the price to come back up over the 50-day SMA. So if you look at this price point right now, we're 2 months into that time frame. So hypothetically, 1 week to 3 weeks from now, we'll see the price back up over the 50-day SMA. And at that point, we can have a little bit more confidence. And especially when the price gets up over 46,000, then I think we're back in bull town, right? We're in a situation where we're going to be able to add to our position confidently and know that we can have that true confirmation from Bitcoin actually being on the right side of the tracks. Again, right now, the recommendation in general is to consider dollar cost averaging as much as possible. And once again, I get this question a lot, so I just want to address it. When you're dollar cost averaging, you do not put all of your eggs into one basket. You don't just, dollar cost average, 25% of your portfolio twice, right? Or, 4 times, whatever the available amount you have is. You want a dollar cost average small percentages per time frame. So you want to set targets. In fact, speaking of targets, I've actually been working with my admins to kind of figure out exactly what we should do here with that, because I get the question a lot about, what are good dollar cost average targets? Well, I'm going to roll out with some videos here soon, likely today, tomorrow, or the next day, rolling out with basically just say, for example, gaming, DeFi, micro caps, top 100. We're going to cover each, basically the top 10 in each category, and make sure you understand specifically what the dollar cost average targets might look like, where we look at Fibonacci retracement levels, previous key level supports, and identify, where should we buy in next, right? Because we know 40,500 is probably a decent DCA target for Bitcoin. We know 37.5 is a good target, but for these other coins, we don't necessarily know that. So I'm going to go ahead and take some time, get those videos out for you so you understand what that looks like. So be on the lookout for that. But that kind of just ties into this here, right? Do not put all of your eggs into one basket. If you're dollar cost averaging effectively, it should be no more than 5 to 10% of your overall available portfolio size. And you're going to want to be able to diversify multiple different coins, right? You don't just DCA into one coin. That makes no sense. Most every single swing trade that I send out is somewhere in the range of 2 to 5% of your overall portfolio. So again, you don't want to put too many eggs into too many baskets, but you don't want to put all of your eggs into one basket either. I recognize that's a funny analogy. Not everyone loves the egg, the egg analogy, but the point is pretty straightforward, right? You get the idea. So again, diversify effectively, but don't dilute yourself. But also make sure that you don't have just so much strength in one coin, and if it doesn't do well, you're totally out of the game. A smart trader will make sure that you have a lot of different irons in the fire, eggs in one basket, whatever the case. You want to make sure you have something spread out, so to speak. Okay. So again, just some friendly advice there. Again, I covered that in my trading academy. I'll just try to reiterate this in videos. But right now, when we have bearish type of sentiment on the short term, dollar cost average is the best way to go, because you're not just buying now and selling months down the road. You can literally add to your position, lower your average to effectively allow for your price point to be lower, and that helps tremendously. Okay. Again, just some friendly advice there. So hopefully you understand what I'm getting at. And if you have questions, of course, feel free to reach out to me. Obviously, my community members, you know where to find me. And if you're not currently one, consider joining my trading community, of course. It's available through Patreon through the end of the month. And of course, next month, we're going to have a website effective for our current members, and obviously a website for public members too, or public users for my we're going to have some charts, a lot of different things that are relevant market data, so you can have a reason to visit the site. Either way, that's all coming later, but just know that the community is something you could consider joining now if you'd like. That's available through Patreon, but we are transitioning soon. Okay, thanks so much for joining me here. Hope you learned a thing or two. Obviously, comment below if you did. I look forward to seeing you in the next video. Have a great rest of your day. We'll see you soon.